talk about the banking crisis, people. Silicon Valley Bank was in crisis, has failed, and now U.S. regulators are investigating, according to a report by the Wall Street Journal. Those include the Justice Department and the SEC looking into the Silicon Valley Bank collapse and also looking into allegedly some withdrawals by key executives right before the bank's failure. Now, the piece is quick to note that, these investigations may not lead to charges or anything actually happening, but there are people within the halls of government moving to understand a bit better what the hell happened late last week. All right, that's the story. I'm going to toss this to Will. What do you think? The regulators, they want to get in and figure out what's going on, maybe dole out some fines, some penalties. We'll see if it comes to that. But what are your thoughts on this one?
Yeah, this sort of story does happen quite a bit, right? Where there's some sort of financial contagion and the Department of Justice steps in to look around a little bit. Sort of like a firefighter going to the scenes of a burning building and saying like, okay, what's the clues here? Let's pick up some information to make sure that everything is above board. And we don't really know yet with SVB if there was some sort of malfeasance. We do know right now that they had a mismatch in assets and liabilities, and that caused a run on the bank once all the depositors were informed of the situation. We don't really know about malfeasance yet, and they're going to look into this. The one thing that is interesting here, and it was confirmed by this reporting, is that a lot of the executives at SVB did sell into the week before the collapse of this bank. And a lot of people don't look like that, right? It's a bad look just to be selling your stocks going into that. We've seen this time and time again within crypto, where a lot of crypto holders will do this, a rug pull, if you will. To me, though, you do have to ask a little bit. I don't know if the bank partners knew this was going to collapse right before, right? It did seem like it was fairly strong. And then all of a sudden, there was a note sent out from a bunch of different founders within Silicon Valley circles that led to a run on the bank. And that's the thing with runs on the bank, right? They're just sporadic and random events that occur very quickly. So, maybe they just sold because they wanted to sell and it wasn't really anything to do with the run on the bank, which had not happened at that time. But I'll throw it over to you, Wendy.
I'm sorry. Well, I have to, I got to say it. I think that they knew exactly what was happening. And I think it's very, very, the term bank run shouldn't even happen. It's not even a real term to me, because people deserve access to their money 24/7, 365. And the way the banking system is set up is it doesn't allow people to do that. We're talking about hardworking Americans here that need to have access to their money. But again, we have the ivory towers. We have the people that are running the banks, knowing that there was issues, knowing that there was problems. They sold a bunch of stocks, and it's a lot harder to track than it would be a blockchain transaction. And this is problematic for me. There's also been reports that certain board members of particular banks worked over at Lehman Brothers in 2007 before that big crash happened. So and I know we've talked about it on the show that you'll generally see people in traditional finance merge over from different places, even though there was a problem with the initial place they worked with. I don't know about you, but all the jobs that I've had, the 9-to-5s I had, if you do a bad job, they fire you. And if you try to get a job somewhere else in the industry, good luck, especially healthcare. I think the same standards should be should be passed over into industries like banking, because that does actually impact people's quality of life. So I'm not very happy with any of the things that's going on, and I will continue to call these bad actors out as I see fit.
I think it was probably the macroeconomic tsunami that did these guys in, right? There was this duration mismatch between the U.S. treasuries that they were invested in and the rapid rate at which people were demanding their money. They couldn't sell in time, and when they were selling it at a loss, and that just is a losing formula. I think really is that combination of just social media fueled speed at which we see finance unfold these days versus sort of banking 9-to-5 traditional, what looks really slow in retrospect. And these banks aren't able to keep up, right? This is something that, Peter Thiel sends out an email to founders fund portfolio companies. And before you know it, everyone is talking about how quickly can we get our money out of Silicon Valley Bank before the music's up. So this whole thing, I think, may be more about the Fed and its decisions than any particular mismanagement decisions at the bank, but maybe the DOJ and the SEC will find out. We'll see.